So today we'd like to introduce you to the concept of basic taxation of partial surrenders. You recall in previous webinars that we talked about basically full surrender, so we'll give you a very quick synopsis of that in a moment. But many times the person says, no, I don't want to completely surrender the policy. I'd like to keep the policy going and everything else, but I really would like to have access to my money, or maybe reduce the coverage or whatever. Okay, so how does all of that impact the policy? Because remember, the policy is still being enforced. So in the full surrender, the policy is gone, which we'll look at in a moment. Okay, but in the partial surrender, you're basically saying, I'd like to keep the policy if I could. However, I want some other options, say reduce the coverage, whatever. Okay, so in other words, there's two ways basically of doing a partial surrender. You can do reducing of coverage, so in other words, reduction of coverage itself, which again we'll see in a moment. Okay, and of course a policy withdrawal. So, as you know, with policy withdrawal, predominantly what it all comes down to is universal life, because you really can't make a withdrawal on whole life participating or non-participating, but you can make a withdrawal on universal life. Okay. However, on whole life, whether it's participating or non-participating, you can certainly reduce the coverage. Okay. So on universal life, you can do that and that. Whereas on whole life, of course, as you know, you can't make a withdrawal. You can only borrow money against the policy. So we'll look at both. So let's say in our example here, we've got Jessie, and she has the following type of policy. She's got a whole life. Again, whether it's par or non-par, doesn't really matter. Okay, it's $200,000 is her coverage. She has a cash surrender value of $24,000, and her ACV is $10,000. So that's essentially what it comes down to. And she's basically saying, I want out. I want to cash the whole thing in. So like we did before in previous webinars, said become a full surrender. And you've got this issue here, the policy gain. That's where your taxes are going to be, is that policy gain. How do we establish that policy gain is, what is the proceeds of disposition? Proceeds of disposition, $24,000. What is the ACV? In this case here, it was $10,000. So therefore, she's got $14,000 gain, basically policy gain, where she has to pay tax on that. Now her NTR is 35%, so 35% of $14,000, she has to pay tax of $4,900. So basically we get that, 35% of $14,000. So she has to send CRA basically a check for $4,900. So what she keeps in her pocket, basically, when she fully surrenders, she got $19,100, which is of course the $24,000 minus the $4,900 that you have to pay in taxes. So what she's got in her pocket basically is $19,100. Okay, so that's on full surrender. Now the problem with that, of course, is that $200,000 is gone. Okay, once that check is cut, and that person dies the day after, the $200,000 is gone. So many times what happens, clients say, no, I don't want to go that far. That's pretty dramatic. I still need some kind of coverage, okay? But I would like to have access to some of my money and so on and so forth, okay? So that's where we get into this whole question of partial surrender. So this is full surrender. We're now going to look at two ways that you can actually have a tax issue when you're doing a partial surrender.